All right. So welcome
Just a
everybody.
quick question.
Yeah, go ahead.
Sorry. I just wanted to ask if you're going to present about all the countries or just USA.
None of the above. We're doing a whole workshop on a whole storyline.
Oh, okay, got it.
Yeah,
Sorry.
nothing in particular.
It's more of the how-to. So welcome everybody to week 4. Today we have economic analysis workshop presented by Andrew, Sandra, and Adam helped out, I believe, but he is in Texas. So he's going through the power outages, I think, and he's pretty cold over there. So he won't be with us today, but he also helped out. Great. So Ryan, take it away.
Sure, yeah. All right, guys. So you can keep up with us on Instagram and YouTube and LinkedIn, and this is our website. You can scan these with your phone. Instagram is a great way to keep up with all the upcoming workshops and tutorials, and we have our YouTube presentations there as well with recorded meetings, and LinkedIn, another great way to keep up with us. So yeah.
Thanks, Ryan. So we'll try and see if we can put those in the chat, but this is the best way to connect with us. And thank you for everyone that's already followed and reached out to us. So today I want to introduce a new membership tier that we have for the club. And just like all the other streaming services that are coming out, it's called SMIC Plus. We're really excited because this is a way for you to get more connected and engaged with the club. There is a small fee, and these would be your dues for this semester. Some of the things that we have planned for this membership is with the $15, you get obviously the basics, the free shirt, and we're going to be coming out with some other apparel. For those of you that are seniors, we're going to be trying to get you guys stoles, and these will be reduced price if you're a member, as well as some of the other merch that we're working on. So what else do you get? We're trying to increase our networking events. So some of you guys were able to come to our alumni mixer a couple weeks ago. So those are the events that are probably going to be more private for the SMIC members now. And of course, for the SMIF alum, you guys will be welcome since you are alum. We're also going to be trying to have more monthly mixers for our team and for the members that are part of this tier. So you'll get access to that. And some of the new things that we're doing is we're trying to do a new private Slack channel. And this is going to be really great for some of you that are either freshmen or sophomores or even juniors and want to kind of advance your career. So we have some people that are working on the team that are going to be building curated lists of internships, online resources, some conferences that we can recommend to you guys, and also possibly resume reviews with some of the professors, since we have a pretty good network of professors that like to support the club and the program. And what else do you get for those $15? Of course, 100% of those profits are going to go to the club. So that's going to help us make these programs and these competitions that we're really proud to put on. Of course, that when we have like prizes, that takes money from our funds. So those profits will help to increase those winnings that you guys are gonna win if you win those competitions. So we're kind of announcing this today, and in the following days and probably by next week, we'll have a sign-up form. But if you have any more questions, if you have any ideas for improvements, things that you would like to see, then please reach out to us. Please follow us on Slack, and you can reach out to Allegra or Jacob or I or anyone that's on the e-board if you have any other questions. So really excited, and we hope that you guys can take advantage of this. All right.
Perfect.
Sweet. So just to let you guys know like where we are, February 16th, this will be our economic analysis workshop. And next week, we're going to have a Bloomberg terminal, like the top 10 functions, and give you guys a little tutorial of Bloomberg, the Bloomberg terminal next week. Cool.
All right, so I'll take care of this part. So we're really happy to announce that our mini IRC registrations are officially opening today. So I'm going to drop a link in the chat. 1 second. I'll do it in 1 second. But anyway, so the link in the chat will be to a Notion that has a little timeline of the competition, what we expect a little bit, and a little bit of what we're going to do for you guys. So if you're interested, please go to the Notion. When I drop in the link here, there'll be a sign up form. Put your email down. We'll contact you and get you some starting documents, and to show you a little bit about how we can help you guys out. We're going to be creating a little mentor program for you guys. So if you have any challenges or questions along your process, we'll be available to help you out, guide you, and really answer any questions you have. So if you're interested, please definitely reach out to me, ask any questions, or Brian or Jacob. He's not here today, but he'll definitely have some information for you if you have any questions. And yeah, we're really excited to get this thing started on the roll. So yeah, sign up, please.
Awesome. Thanks, Damien. So I think I went ahead and put the link on the chat. So if you guys could, you guys want to check out the timeline that we have planned for you guys, and kind of like what the competition will encompass and all the different like due dates, please look at that wiki. It's on the chat. So gives you more information there. We'll be probably updating that, and with that mini IRC like chat channel that we want to create, I think you guys will be able to get more information. All right, awesome. I think that's it for announcements.
Yeah. I can take over so you don't have to keep flicking over them.
All right, yeah.
I guess we should have a cute little, intro slide or something.
I know I kind of missed out on that, but like I said, we have Adam and Sandra who are going to present economic analysis workshop, really give you guys the how-to and how to build that narrative. And these are like the best people to be giving you this tutorial.
Can you see the screen over here?
Yeah.
What can you see?
We
All
see the speaker view and then the little speaker box.
Oh, what?
I think you're showing your whole desktop, that's why.
Come on, Brian. I'm not an expert at this yet.
You got to share just that Chrome window or whatever.
All right, there we go. How about now?
Perfect.
All right, cool. Yeah, I mean, how sad is that? Adam can't even get any power, and he says every hour they'll turn it on for a couple minutes so people can cook, and then they'll turn it back off again. But anyway, all right. I love economic analysis. I think it gives you a right to be kind of judgy in a way, but also you can be kind of creative. And you can, it's nothing, it's the biggest thing ever. It's the most complicated thing ever. But I mean, if you really try to dumb it down, you can really make some pretty informed opinions on it. So I think the absolute best way that anybody can go about doing an econ analysis is tell a story about it. Because nothing is more frustrating than somebody just saying, oh, you know what, this is my opinion. And yeah, that's it. And you're like, okay, well, why? Tell me why. Why is it not a good idea? Why is that the best idea ever? So we're going to break it down today, kind of this couple main parts, like classic essay format, MLA, you name it. Give an overall picture. What are you looking at? How are you getting this? That's kind of like our intro, right? And then we're kind of go to this big four, which are GDP, inflation, unemployment, interest rate. Pretty much everybody has to look at those for every economy that you're looking into. That'll be kind of your thesis statement. Off these guys, can you make an informed opinion about what you want to look at? This is kind of driving the whole paper. Figure out what everybody's looking at, and then find a little crack and try to expand on that to see if you can capitalize on something. Next, all right, fine. Let's talk about the drivers, right? You got the big four down, and now we got to talk about what is pushing the economy in a certain direction. And this can apply for any economy out there. And then finally, have a verdict. Tell me why. Tell yourself why. Tell your client why. And I think this key advice, let me wait till it moves, but basically your time is valuable. Economies are huge. You can get lost looking at small little things like how crypto is going to change the way consumer habits. But overall, you probably should be focusing on, bigger picture stuff. And then, if you have time, of course, focus on the smaller things like that. But relevant and revealing information, you're looking for kind of aha moments and whenever you're trying to do research on this. Sandra, you want to tackle this one a little bit?
Yes, sir. So basically, when you're analyzing any economy, we're taking this top-down approach, right? So you're starting very general, and then you're going down and just condensing it to more specifics, right? So you're starting with your global economy, then you're looking at local economy, sector, industry, all the way down to how the global economy is affecting your specific business or a specific sector. You want to look at macroeconomic indicators, which Andrew mentioned in the previous slide. That would be your inflation, your interest rate. And this is going to be pretty common throughout all economies, right? You want to look at that. What's going to change is the drivers. Each economy has different drivers. It's going to differ from emerging markets. It's going to differ from a more established market like the US. So you want to look at how different aspects are affecting these macroeconomic indicators, but still stay in the realm of these indicators.
Mhm.
You want to touch on anything, Andrew?
Yeah, I guess, at the end is, you have a goal, right? You're not just looking at economies for fun unless you're an economist. But, you have a set goal in mind. Why are we doing this? For yourself, I'm not very risky at all. I don't like just pushing my money out there and hoping for the best. So you got to abide by your risk tolerance. If you're worried about, like if we were in 2016 and Trump is saying, I hate China, we're going to impose the biggest, tariffs on China that we've ever seen. That might be kind of risky if you want to take a gamble on an economy that's super trade reliant, right? But there's also flip sides of that coin, right? Which we're actually going to dive into today about that specific instance, because I was like that too. I'm like, why would I ever invest in China? It kind of sketches me out. I don't really trust them. But then when you take a deeper look, you might have a different opinion. So again, have your investment philosophy, align it with your investment goals, and make sure you're within the risk tolerance, or you're just going to psych yourself out. Yeah. All right. So I think you have to kind of always be informed with the news. And again, it goes without saying, yes, everybody just listen to the news, but target your news right. You gotta be like well informed of the current events right now before you even start. What's going on. Market volatility. Well, why? The COVID-19 pandemic. Worldwide, it has impacted large and small corporations and like mostly family-owned businesses, especially for a consumer-centric economy, right? It was an election point. It was a K versus a V-shaped recovery, right? So the K shape is some aspects of the economy see this really strong growth, while the other, there's gonna be, it's gonna be segmented, right? There's gonna be, one that doesn't really recover and then the other one that does recover, right? So we need to know these kind of things when we're going into it, right? That like part of the K-shaped recovery. We see, look around, right? Businesses that were well established pre-pandemic, a lot of these discretionary, retailers, they've hit these huge roadblocks, due to these lockdown-induced kind of drawdowns from consumers not being able to visit these store locations, right? So, compounding this, or our lack of disposable income and our shopping habits that kind of prevent this smooth transition to an online economy. So in technology is an example that can capitalize on that, because they jumped on it immediately, and they really responded without any long-term implications to their business strategy. If anything, they're kind of running shortages because a lot of them are having over demand for their products. A lot of semiconductor companies are doing that right now too. So we can see with the instance that we're going to talk about today is an entire economy that kind of jumped on this kind of this dead space. So we'll talk about that today, specifically with an instance. So yeah, this slide is basically telling you that same investment strategy that we were talking about before is, kind of a top down, do we use CNN? Do we use Fox? Absolutely not. I think they're absolute garbage news sources. It's just all hype news, and you can't really get an informed opinion on that. They get all their information from other sources like this, but they just put an opinion on it. And, you may like them, but I don't think that's a very well-informed opinion, right? Because they're pulling all their info from these guys up here. If you have other kind of news sources that you like too, Just don't go with the ones with opinions. So let the news guide you when you're making these analysis, right? People always, say it, don't reinvent the wheel. And that's very serious. You don't ever want to go that that route, very focus in on what you really need to pay attention to. Sandra, you want to talk about anything on here?
Yeah, so for this one, I think you nailed it pretty much. So when you're looking at the headlines, it's a good idea to focus on the four main drivers of GDP, right? So it would be business investment, government spending, consumer spending, and then your exports, imports. So like, for example, if you're looking at the Chinese economy and there's a headline that says US-China trade war or something like that, you may want to look into that headline just to see how it affects the import-export portion of GDP. But so essentially, you want to use the headlines to guide your research, but you don't want to use the headline as your research. And that's a very important distinction because the headlines, a lot of them could show some bias. So you don't want to automatically assume that they're correct. So question every single thing that you read and develop your own opinion. So that's why we have access to the Bloomberg, so you can fact check all these headlines and whatever data or research or whatever is being presented to you. So always question everything.
I love that. It's let kind of these news sources tell you where to go. Just be curious about it. Which is why, again, you can be judgy and you can also be curious about it too. So, it's pretty awesome. All right, so I bet you guessed it. We're looking at China today. Very, very hot topic in terms of direct investment right now. So, we kind of believe that, we're going to run through an example of how to look at, economy. It'll be very brief because we're kind of constrained on time, but we're definitely going to try to run through it as fast as we can and kind of efficiently as we can and effectively, I guess, too. And again, I have a little asterisk at the bottom here. It will vary case by case, not it can, it will vary. So some things that we looked at, you're going to look internally, externally, and of course, globally, right? And, the way, however it fits into your storyline, you can reorder those. But, we think that, China's shifting role in the global economy is kind of news for investor concern, and concern is kind of like, wow, they're capitalizing on the opportunities that were granted to them kind of before coronavirus too. Higher consumer savings rate, substantial kind of this risk adjusted return compared to like the US broad market, their currencies gaining credibility, and they have a kick-ass credit rating too, which I think is being overlooked too in terms of rates. So yeah. I'm sure a bunch of the Smithies have seen this a bunch already, these kind of tables and the way that they're set up. So it's a consensus forecast, right? I said get a lot of them, and you really should. All those news sources are going to hint at different, GDP growth levels. They're going to hint at different inflation rates because these two guys go hand in hand. And then you can tack on unemployment to that and how the interest rates are reacting. But specifically, which we'll get into, is the retail sales for China, right? We think that they're becoming westernized, and we think that they're having a more consumer-centric economy like the United States does, which is not the case 10, 20 years ago at all. And we kind of did a little bit of research on that too. Why did I highlight GDP? Well, is GDP growth always a good thing? If you have this booming GDP growth, it's super fast, is it great all the time? Absolutely not. Just because GDP might be this extremely high value, wealth, there's many factors that go into that, right? Wealth is top heavy for, the general population. Large corporations who lobby the government will kind of reap the biggest benefit. Is your quality of life changing for the people in that country? Unemployment, workers' rights, public infrastructure, living wages, working hours, leisure time, and the list goes on and on. So again, it's a lot of things that you can look at in terms of like this crazy high GDP growth. And that's another one of those elements. What do you need to focus your time on? I don't have the manpower to look into every single one of those things. I need to focus on what I need to look at. But again, with GDP, if you have too much GDP, runaway inflation, it can erode stock market gains. It makes money, but it can be less valuable. But again, their inflation is kind of left in check. So again, something that we can expand on during this whole thing. Sandra, you have anything to say about this one?
Yeah, so numbers tell one side of the story, but it's also important to look at the qualitative side. So why are these numbers the way they are, right? So for instance, if right now the numbers are pretty standard across the board, right, for GDP. So you could assume that GDP is going to be whatever it is, right? But then again, you see 2020 in 2022, you see that spike, right? There's a huge difference. It's about a 6% spread. So you want to look into what might be driving that. And like I said before, question it. Don't just assume, well, the numbers say what they say and just go with that. No, you want to make sure that you back up your numbers with a qualitative analysis, and that's where your research comes in for the drivers and stuff like that. So again, that balance between quantitative and qualitative. The forecasts are forecasts. They're not set in stone. So just because it may say 8%, it could be less, it could be more. So take it with an open mind. This is what the projection is, but feel free to develop your own projections based on your research. You can disagree. You're allowed to disagree. And if you disagree, make sure that you have the data or you have evidence to back up whatever claim you may have for that, therefore.
Mm-hmm.
So.
Yeah, and that's actually, she brought up a great point, is China was the only large global economy to have positive GDP growth in 2020. So, I mean, that again, we looked into that too. So that's pretty impressive. So yeah, let's get into our internal drivers, right? You know, we think that there's 4 factors that'll kind of aid in the shifting role for China. You know, higher consumer savings rate, risk-adjusted return, currency stability, and a higher, very high sovereign credit rating. So first, this is where we're talking about the consumer-centric economy, right? China's saving a lot less money, and they're not really known to do that, right? So our first internal driver is going to be this high consumer savings rate. So historically, they've been a nation of savers. So you can see in this graph, they've begun saving less and less of their money as a percent of GDP. So these new kind of westernized spending habits reflect a society where these younger generations are less likely to save compared to their conservative parents or grandparents. And I guess what drives something like this. I included on the right here a little statistic. In 2010, the average Chinese worker saved 39 cents to the dollar, and I converted it to dollars. In 2018, they're saving, maybe I have that backwards. Or sorry, they're spending. That should be spending, not saving. That's a typo. They're spending, they're saving a lot. There's a 15% decrease in their savings rate. Sorry, there's a little typo there. But you get it. It's kind of reflecting what's also going on in this graph too, is they're saving a lot less money. That means they're spending more money, right? Sandra, you want to touch on anything?
Yeah, I'll just add one quick thing. So again, question everything, right? So we're seeing this decline in, or this shift from saving to spending. So basically what drives the population to spend more than they save? So you might want to look into maybe income and wealth. Is there aging population, or is it like in China's case, they're going more into that consumer-oriented economy. So maybe there's lower rates, or change in interest rates. Obviously, if there's high rates, low consumption, low rates, high consumption. So break it down into little pieces until you get that full story.
Mm-hmm.
That's.
Yeah, let's see. So our next driver that we have here is the broad market outperformance. So this one, it's a bit of a stretch for an analysis, but I'll kind of give the reasoning behind it. So I compared, let's say we put our money into the broad market, in the US broad market, and I compared that to the Chinese broad market. And like you put our money into, a basket of US stocks versus a basket of Chinese stocks. Well, the past 20 years, this Chinese basket was performing significantly better in terms of basis points than the Russell. But again, this gap is closing in a little bit, and it didn't account for that standard deviation. But if you remember from last week's economic analysis, that the risk associated with the higher return is actually closing in on the U.S. broad market. So it's a bit of a stretch, but it still shows you there is outperformance, significantly in emerging markets. An important note about the this pie chart on the right is the current Chinese broad market. The sectors that they have in that are a majority kind of consumer discretionary, right? And how can we look at this? So right now we're breaking down the sectors inside of their broad market, what makes the most money for them. But that inside of their consumer discretionary is just direct to marketing retail. And it's most influenced by youth consumer spending habits, right? This new American style consumer, spending ability from a population that is they're saving a lot less money and they're putting more of their money into consumer discretionary. So yeah, I mean, this is just something that you can look at and, a little bit evidence why. Now, again, let's try expanding on this analysis. What if we looked at the MSCI China index 20 years ago? Do you think we would see, this high amount of consumer discretionary spending? Probably not. That might be worth something to look into. And then we can really see their the weighting, change over time. Yeah. Sandra, anything?
So quick thing. So you're comparing it to the Russell 3000. So the reason why we're doing 3000 as opposed to 500 or S&P 500 is the Russell 3000 represents about 97% of market cap value, whereas the S&P is about, correct me if I'm wrong, I think it's 85% or so. So in our research, we use the Russell instead. Just putting that out there.
Yeah. Yeah. All right, let's take another internal driver here. Credit rating. So as you see on the right, I broke down just using the S&P rating scale of what China's credit rating was. So if you ever invest into bonds or, they do it a lot for like political risk scores too. Basically, sorry, I keep saying political risk, country risk scores. You can look at the credit rating of a country and what the average kind of bond rating is. So you look here, I outlined them for the past 20 years on the bottom right hand graph. That's basically telling you how their credit rating has changed. So if you're investing in China in 2000, yeah, you're looking at a 0, which is is a triple B or junk bond. So they started borderline junk in 2000 and now they're just shy of high medium gray, which is an A+ rating. And it was actually downgraded after the 2016 election. Again, that's what I kind of mentioned about Trump being in there. It was definitely demoted off that as well. Yeah, if you compare it with that left-hand side there, if you're comparing, a company or a country with a similar credit rating like Japan, I mean, check this out. You're getting a pretty consistent, 3+% yield out of China with that A+ credit rating. And Japan, which has had negative to very, very low interest rates, and they have a similar credit rating. So take that, how you may, but, it's something to take into consideration if you want to invest in some kind of fixed income or just assess the credit rating of a country. Anything else, Sandra?
You covered everything.
All right, cool. Yeah, so let's take a look at I guess some exchange rates. There's a little discussion I had last week about how the spot exchange rates. But I think this last driver is kind of like this higher yielding currency, right? So as you can see in this graph, it's kind of telling you the strengthening Chinese currency to the dollar. So it's likely due to a whole assortment of things, but primarily low U.S. interest rates and probably economic uncertainty, and definitely a strong Chinese recovery due to coronavirus. There's a graph coming up, which I'll show you in external drivers, about the the coronavirus cases. It's kind of a trip, but it's that strong Chinese recovery. I'll touch on it later. It's very important. But if you think about it, these low interest rates, that the U.S. has, can bring on more issues than this, really small return, right? If you have foreign investors that are willing to, invest in China with a, stronger currency or strengthening currency is not as strong, of course. But these these foreign investors were going to find opportunities outside of the US where they have a more reasonable return while not having to worry about losing any gains due to any kind of these unfavorable exchange rates, right? Yeah, Sandra, you want to touch upon how we made this kind of a driver?
Yeah, so we basically believe that if the US continues down its fiscal and monetary stimulus path, the dollar is basically going to continue to weaken, right? So in addition, if China continues to have that positive GDP expectation and a higher interest rate, investors may like flock to opportunities in China, and thus that strengthens the Chinese currency.
Yeah, so tell me that's not the driver that we're willing to look at, right? That could be a huge push factor, or sorry, that's a pull factor for investors, right? So yeah, now we're moving down the storyline, continuing down with these drivers into external drivers now. Now we're gonna try to take a scope of a little bit outside China as well. So yeah, I mean, I think the United States election outcome definitely had an impact on, I think it's a big positive for China. And, you know, I think also the trade reliance too, it's not as sketchy anymore. Again, the US dollar, also an issue. That's another positive benefit for China. A globally weak pandemic response certainly helped China, and you know, a struggling global market as well. Well, you can take advantage of a lot of different avenues when everybody else is struggling. And why not? You can. Yeah. So I like these two graphs because it makes you think trade's not that big of a deal if things just cut out quickly. So we took a look at the US trade balance as a percentage of Chinese GDP. Okay, what is it? It's over the past decade, it went from about 0.4% of GDP down to almost half. So over the past 10 years, their US trade balance has declined significantly. So it's already been happening before Trump. So I think, you know, when he kind of jumped on that train, he may have already known it was coming. So yeah, that's kind of interesting when you start looking at the numbers. Yeah, and then on the right here, it's China overall has kind of been eking away from this trade balance as supporting their GDP. So, you know, again, we looked at the 10-year trade balance as a percent of GDP, and we see that, you know, kind of peaked around 2016, and it's been slipping ever since. So they're again, we have this, our kind of philosophy right now is China's shifting more towards consumers and at home growth. And this is supporting that as well, right? So on top of that, you know, Biden kind of claims that, you know, the trade war with China was a mistake and it kind of hurt more American businesses and consumers. So they're shifting away from this, you know, trade reliant economy. Yeah, I like this one. Sandra, you want to talk about this one a little bit?
Yeah. So basically, like over the past year or so, the US dollar has been super volatile. Now, as part of our research, weakening dollar, right? So according to the Bloomberg consensus data, the forecast suggests that the index is going to be dropping into the high 80s, which are levels not seen since the credit crisis earlier in the decade. It also is expected to drop more every quarter, or drop even more by Q4 of 2021. So again, we're seeing that weakening of the dollar. When the dollar is weakening here in the US, that's a potential opportunity for investing in emerging markets or elsewhere.
Agreed. All right, this is the funny graph I wanted to show you about coronavirus. And just for perspective, China's the purple one. So yeah, give that a little moment to sink in. These are confirmed coronavirus cases. I mean, go USA, man. Look at us. We're on top. This is good stuff. But basically, here's the three largest countries that have the highest amount of coronavirus cases. So, you can see that holiday surge that we had starting in December. I mean, we actually started to flatten the curve for a third time right there. Like beginning in May, we started to flatten the curve. Beginning in August, we started to flatten the curve. Beginning in October, we started to flatten the curve. Thanksgiving rolls around, Christmas rolls around, New Year's rolls around. We saw the highest increase from like 150,000, cases, per week or per day, to 300,000, some ridiculous numbers. But again, now we're starting to flatten the curve again. But I mean, I'm not saying go outside again, but it's definitely, the vaccines are working and all this jazz. But okay, while we're talking about increasing coronavirus cases, how about China? They've somehow managed to keep under 100,000 coronavirus cases. I think it was cases. This is I normalize this a little bit, so the numbers are a little bit off. But they've kept under I'm going to say 150,000 cases. We could probably slim that down a little bit more if you do a quick Google search. But while you have these developed markets like Europe and North America struggling to contain COVID, look at China. They were like, oh, we're done. We'll open up our economy immediately. Our retail sales are going to be fine. Discretionary spending, oh, it's fine. Don't worry about it. So, I think overall, also the other countries here is India. India is the second highest global population, China being number one. And then that's also Brazil in orange. So they're still on their way up right now. So anyway, it's an interesting little graph right here to see how well they capitalized on, controlling everything. Yeah, so I guess we can wrap it up. In terms of this whole discussion, I'll take over this one, Sandra.
Yeah, so as you can see from the chart, basically the global economy is at a low point, but we do expect it to enter a period of recovery between 2021, 2022 or so. However, we also expect that China is going to continue to outperform the global growth. And it's in comparison to the rest of the world, obviously, the same time frame. So again, the weakening of the dollar, low interest rates, overall economic uncertainty, that's going to continue to drive foreign investors towards a stronger Chinese economy. And overall, we want to be clear that China's role in this post-pandemic global market is still in a transition phase. However, they're shifting into a role. It's fitting because of their success in handling the pandemic. So again, from the previous graph, they've done a really good job of flattening that curve. But they've also, because they have made a conscious effort to legitimize themselves and further establish their country, that kind of leans them more towards a dominant player. So again, huge opportunity in the Chinese market because of all of this. And
yeah, I mean, like another point I want to make on that is we looked at PricewaterhouseCoopers research about the G7 and the E7 countries, which is the developed and emerging market countries, basically. And they're saying that in about 25 years, these countries could easily double the size of the G7 countries. And when we're looking at China's global share of GDP, they have the largest purchase power parity, and it's expected to increase about 20%. And it's right now sitting, or it's increased to 20%, and it's right now sitting around like 17%. So that 3% difference may not seem impressive, but it's something worth noting because by comparison, while emerging markets are expected to increase or remain at sustainable levels, this causes the G7 market share to erode from 33 to 20%, because all of these emerging markets start gaining part of that global market share. So these G7s are definitely losing control of it. And it's not new news. But I mean, it was definitely a huge kind of assumption, but I mean, this is kind of, concluding what we're talking about here with China. So yeah, I guess we can go over some questions if we have any questions. And I think we have a little bit, we can go over a little bit, some of these Bloomberg economic functions. I'd write them down if you have a terminal access. They're pretty handy. Yeah, Yeah, you guys want to ask some questions now? What do you think?
I think that was a great presentation, guys. Thank you for giving us the how-to of, starting out with the intro and how to dive deeper into these economies, because it's not just like analyzing one stock, but you're analyzing a whole country. And so you kind of have to pick and choose what to research. But for the new Smith team that's working on the economic analysis, this gives you a great framework for how to build it out. I'm sure you guys already started on that, but probably gives you some more tips on how to present that, which I think is also really important. But thanks, Sandra and Andrew. Let's see. First question here is this from Joe. Do you have any commentary on the recent yield curve steepening and the rationale behind that / implications going forward?
So the yield curve steepening for the United States, right? Not the Chinese one, of course. But I mean, essentially it's saying, that strong recovery, right? People are becoming less fearful of of another recession, right? I mean, not specific commentary in terms of relation to China, but how would that affect our relationship with China? That's a good point. I'd have to look into that more. Kind of like how we would depend less on China if it's a growing economy.
No, this
Yeah.
is independent on relation to China. It was more focused on long rates rising to very, very high levels, pre-pandemic levels.
So would you think that, people would be less interested in investing into, U.S. fixed income, essentially?
I think that's one interpretation, especially given long rates. You could also look at the yield associated in the yield curve, and especially in the long rates. With the yield going up, that's sort of a substitute for perceived risk in the long term. And one of the factors that does affect long rates in the yield curve is inflation.
Yeah, no, absolutely. So, I mean, for the econ team right now, if you're listening to that, I would certainly look at the U.S. yield curve. And now that's a great point, Joe.
Great presentation, guys.
Thank you.
All right, so this is another question. Any thoughts on how China's increased trade relations with the EU, they just surpassed the US as the top trade partner, will help to cement China's role in the global economy, and your thoughts on what that means for the US? So a little background, I think it just came, some people are reporting it that China just became the top trade partner to the to the EU, replacing the US. So those relationships are really cementing China's role in the EU as an importer and exporter. So thoughts on what that means for the US or just the global economy as a whole?
I mean, I think it's well deserved in the perspective that we got what we deserved because we were benefiting a lot off the trade relations that we had with China. And, I think after Trump's kind of hostility towards the trade environment, which in fact wasn't very successful, I think it's China is not only diversifying its trade exports, but they're also, like we saw in some of those graphs as well, is like, well, they're becoming reliant less and less on GDP. So the way I interpret that is, they might surpass the US, but overall, it's kind of peanuts because they're already shifting over to a higher consumer reliant economy. So you see the kind of segue into that kind of thought process is they're definitely diversifying into a higher consumer discretionary kind of space as consumerism that they're driving.
Not only that, but just the fact that they're building these strong relationships with other countries and Europe specifically, that just proves that they don't need the US. So it goes to show that while US is this major powerhouse at the moment, there is opportunity for other countries to step up that ladder, and as China's doing, and become the next powerhouse.
Yeah, I think if you want to like, I also recent news is kind of like, China is kind of on the forefront of environmentally friendly business models. Like it sounds so strange, but definitely do some research on that. If I wanted to kind of redo this, research that we did, I would definitely look into that. I think investors like seeing that. I think China's kind of they're kind of woke on that little spectrum right there. It's they're very environmentally friendly with their business models, which was not the case 15, 20 years ago. Definitely look into that. And also they have a lot of relations with South America now. That's been going on since I think 2015. They've always had a foothold in, I think, two of the world's largest dams are actually built by the Chinese. Some of them are in China, but the rest, the other largest ones are in Africa. So they also have a large foothold in Africa too. So, I mean, it's just all these different avenues that you can look at. So, yeah.
Yeah, I think they're one of the bigger investors in, at least directly from Chinese government in EV technology, where I think we kind of put it off for a while. It seems like we're more invested now. You have like these major car manufacturers now, like GM, and that are starting to get on that trend. But China's been doing it for a while now too.
Yeah.
Hey team, great presentation. And while I can't speak for everybody, I know that at least for me, the various speaking points that you've had on economic analysis will certainly help me out during my presentations sometime in the future. I appreciate that. My question is in regards to China. And I know that in classical government structures like the Chinese Communist Party have or can be unreliable in terms of their data and numbers. How do we know how accurate their numbers and information might be?
Yeah, great point. You can't call them a liar. That's the number one rule. I think every global economy is guilty of it, but others to some greater extent. But that's the way we diversify away from thinking, well, there may not be reliable. Get a bunch of sources. A lot of people inside of China, there's like the China Bureau of Statistics releases a bunch of stuff, and you can have so many different perspectives, especially on Bloomberg, about different inputs that where they get their data from. So just diversify in the amount of, I guess, whatever you're looking at, just diversify how many resources you're getting them from, because nobody really knows. It's already difficult enough for the US to get a census data out, and they're already thinking about doing a new census for the 2020 census because they're not confident enough that this one's correct. So, you have to take everything with a grain of salt and kind of diversify enough in terms of your resources. So hopefully that answers it a little bit.
Yeah.
I think that was one of the most fair answers. Thanks.
Yeah, I think maybe I could touch on that also. It's hard for you to go ahead and like gather that data yourself. Like it's hard for you as an investor to track the unemployment of a country. But what you can do, and it doesn't really answer your question, right? But it's kind of when you as an investor step in and say, well, we're not super confident in that. And so maybe we'll diversify and not just go into that country, but we'll invest in other countries. Or maybe you just won't invest at all, right? So there's been a situation where that's happened to one of the Smith teams where we didn't feel confident in the information of a country, and so we just didn't invest in it.
Yeah, and a little bit more on that. We were so if anybody knows how to calculate or how China calculates their unemployment rate, there's two different unemployment rates. There's a rural unemployment rate, and there's like an urban unemployment rate. So which one do you use, and why is it like that? So they'll have like an unemployment rate for like big cities, And, because when we were first looking at it, we're saying, well, we saw a dip in their GDP and we didn't see a dip in their unemployment. We know a lot of people were out of work because they couldn't have been working they locked down for like a month. Nobody filed for unemployment, for example. But again, their economy isn't set up like that. They don't have the similar, packages that we do. However, they did though. If you look that up too, they did have a little stimulus package for some people. But yeah.
All right. Thanks, Albie, for that great question. There's one more that maybe we could get to.
Sure.
Let's see. Yeah, Brian asked, or I guess maybe just your thoughts on China turning to a more consumer-reliant economy would in turn benefit those exporting to China, such as South Korea? Question mark.
China, because they're becoming more consumer reliant.
You think that?
Yeah, I think it's a spillover benefit. I wouldn't look at it in terms of, well, let's see, how can I think about that? Then by China being more consumer reliant, how would that benefit South Korea? If we look in the long terms, China's still going to always export. They're not going to just cut it dry. But I think in the terms of benefiting the overall Chinese population, because I think their GDP per capita is like 9,000 or something very small versus like the United States, where it's probably like 50, 40,000. So it's very small. So I think, I don't know, it's a very tough question, but there certainly is spillover effects from local kind of economies based on how prosperous one is. But in terms of like trade, so I'd have to look into it more. But
yeah, I'll kind of comment on this a little bit. Like, for example, I was part of the Smith team last year, working on the Asia exposure, and we decided to focus on countries around China that were China-centric, because China was very ahead of the curve on beating coronavirus and stuff like that. So because they were already ahead of the curve and getting back to work, getting back to business, we wanted to be exposed to China-centric companies, such as like Taiwan and South Korea, because we knew that China would be putting in these big orders for materials and stuff like that into these other export countries, and therefore spill over, like Andrew said, and benefit them.
Mm-hmm.
So there's a couple ways of looking at it. Yeah.
Great. So if there's no more questions,
I have a question.
Sure.
Just one small question. So, as far as I know, that the Chinese party, as far as the government, they're communist, and they have the authority kind of to take over certain businesses if for certain reasons, or multiple reasons. Don't you think that will drive the foreign investors away, and even some Chinese investors away?
Yeah,
because of the amount of control.
Absolutely. And that's actually a point that we've looked at too, is China has what is called a red chip, the red chip companies. And that means that there's some kind of the Chinese state actually owns some or a good majority of that company. So there's actually, you can Google them, because if they're publicly traded, they'll tell you their ownership breakdown. But that's a great question, and you can avoid companies like that can be immediately shut down by the government. There's some kind of control there too. So yeah, absolutely great question. And for example, the previous Smith team, we found a ETF that avoided these red chips and invested in everything else. And yeah, we're pretty happy with how we're coming that. But yeah.
Sounds good. Thank you.
You're welcome. Yeah, and also for any economy, I would break down how they list their securities as well. Because China has several. There's A shares, B shares, C shares, H shares, and then I think P shares and red chips. So they all have different meanings, and they all kind of skate around certain ideas of what they're investing in specifically and what kind of control that they have. So yeah, great question.
Thanks.
All right. So thank you everybody for joining. Please join us next week for Bloomberg tutorial, and the week after that for, I think, a fixed income workshop. So for those of you that are on that team, I think that'll be really beneficial. But thanks again to our presenters and our host, Andrew and Sandra, for a great presentation. So have a great rest of your day, guys, everyone.
Everyone.
Everybody.
Good job, guys.
Thank you.
Thank you.
Thank you.
Thank you for the presentation. Bye.
Yeah.
Thank you, amazing team. Bye-bye.
Thanks, Albie.
Thanks,
See
Albie.
ya.
All right. So I think Eric wanted to stay after. He had some questions for us.
Yeah, so I emailed you like last week, Brian, about membership, and I was just wondering, like, I did everything. I went to my bar and this is my first meeting, and I was just wondering if I have anything else that I have to do or anything like that.
That you have to do to be a member is the question?
Yeah, or like what else does a member like? Do I just attend meetings?
Yeah. If you, Ali, do you have a good answer? Basically, there's two tiers. There's like a free membership tier where you can just, just show up to our workshops. Feel free to chat in the general chat in our Slack. Feel free to reach out to us through socials if you have any questions. And then we're introducing a new like paid membership tier for the semester. So it's SMIC Plus and it's $15. And with that, if you really like to be a part of the club and get to know all of the eBoard members as well as some of the Smith alums that we're in contact with, then you'll get added to a private Slack channel, and we'll host monthly mixers. And not just that, we'll have like resources for you guys. And that's really if you want to, stick with the club and learn more about the Smith program and the Smith team and all the really great stuff that we have to offer. But there's really no like checklist that you have to do. It's really up to you. Yeah.
Yeah, that membership, the $15 one, that's the one I want to join. I saw earlier that there's an email that I have to contact. Do you mind sending that in the chat again?
Yeah. Are you on the Slack?
Yeah, I joined, but I don't really use it. So like, is that where you guys just chat at?
Yeah, that's where everybody's at. So bye, Sandra. Thanks for staying. Yeah, let me give you actually, if you're on Slack, can you send me a message? Because we have something, it's easier to just send it to you through there.
Okay, I'll just after this, I'll just log on to Slack and I'll send you a message.
All right, thanks, Eric.
All right, thank you. All right, y'all.
Yeah.
Right on. I'm out too. See
All
ya.
right. Thanks, guys. Thanks, Andrew.
Yeah.